Well, good morning, everybody, and good afternoon to some of you, depending where you're at in the U.S. It's a pleasure to have you here today. I'm Dan Hallstrom with the U.S. Meat Export Federation, and I would like to welcome all of you to the USMEF Pork Production Global Export Update webinar. As all of you are well aware, 2020 has been anything but normal with relation to the marketplace. I've never seen so many moving parts globally to our markets than I have this year, and then you cap it all off with COVID-19. That being said, the one good thing is consumers are still eating pork, and eating pork, a lot of pork globally. Specifically, you look at the year-to-date exports through August, we're up 17% in volume, record pace for 2020. Of course, a lot of this is led by China, but there are some other regions as well that have shown significant growth. Regions like Vietnam, the Caribbean, Japan, Ukraine, to mention a few. And Japan, I think we have some anecdotal information that the stats going later in the year, we should see an increased share gain there as well on the chilled pork. And we've already seen significant progress on seasoned ground pork. So a lot of good things going on, but strategically, USMEF is very focused on defending our share in the major mainstream markets, the big markets, Japan, Korea, Mexico, China. But at the same time, we're also balancing very closely the ability to expand our presence in some of the emerging regions around the world, Central America, South America, Southeast Asia and Vietnam and the Philippines, and of course, Africa. So with this in mind, Erin Bohr, USMEF's economist, is going to dive down into a lot more detail, a lot more specifics than what I'm sharing with you, and she has a wealth of knowledge. So with that, Erin, take it away.
All right, great. Thanks so much, Dan. And thank you everyone for taking time out of your busy schedules to join us. And let me see if I can share the right screen here. Doesn't look like I'm sharing the right one. This worked so easily before. Why? Here we go. Okay. I don't know. Is it in presentation mode? It's doing something different than it normally does.
I think you're good, Erin.
Looks good, Erin.
Okay. It's not showing the green line around it. Sorry. All right. With that, let's rock and roll. And I've attempted to lay out some highlights for today and kind of where we sit at the moment. And we joke that, you know, these slides are outdated as soon as you give them, especially in a year like this. So I am in a fortunate position where we have higher prices at the moment and things are looking more optimistic. So starting off, consumers do love cooking pork at home, as Dan said, and paired with that, the quick service restaurants or limited service restaurants have weathered the storm obviously better than full service restaurants, and that also favors pork. So we have the current cutout, near $100, and we're in October. So kind of an amazing situation with many factors contributing. And the market has been pricing producer profitability, returning, maybe that should say, in 2021. We know the grain markets are moving as we speak, but still hopefully some hedging opportunities for all of you. And on another hand, labor is still impacting what we can produce, and the wide spreads in bone-in versus boneless, and then also impacting what packers can save and export on the variety meat side as well. And still record US red meat production and forecast for 2021 as well. And that's specific to pork too, meaning that we have the US supply advantage on the global stage. And obviously ASF still a major factor. We'll talk through some of that. And can't forget to mention the Section 232 metal tariffs. These go all the way back to April 2018, still hitting our pork to China today, 25% tariff disadvantage in China. And that's basically a 25% discount on US products. And that spreads over into other markets as well. And it's underpinning some of the kind of shifting volumes that we see even within North America. On the currency side, it's not all bad news. We'll talk through some of that. Economic rebound expected basically across the board in 2021. It looks more depressing if you factor in the growth that we should have seen this year and then where we should have been next year. But just looking at the change after the decreases this year going into 2021, it does show a strong rebound across markets, at least in baseline scenario. And high incomes to weather the storm and the long haul, kind of similar to what we see here in the States. A dual point to that would be that pork is an affordable protein, and we see opportunities even in hard hit places like Mexico, and we'll touch on that. And China has likely peaked, but still buying massive volumes, and also shifting to, I think, more of a normal import pattern, perhaps. We'll touch on that a bit more. And we see opportunities pretty much everywhere else. Granted, that's going to be at a price. All right, so in a year of significant challenges, we do love cooking pork at home. And this is just kind of a snapshot of where we are today, but production still managing to increase year on year. And again, expected to be record large this year and next year. And there's your futures closing prices from last Friday. And again, profitability showing for next year. And look at these strong double-digit increases across all primals in the cutout as of last week. And so when we look at US domestic, at least what I've been being told is a lot of the reason for our strong prices today is strong US retail demand, and overlaid with strong export demand on top of that, and a need to refill the pipeline. We know cold storage freezer inventories were pretty depleted, and so needing to fill back in, and retailers likely also not wanting to get caught short given continued strong consumer demand for pork. And I have a picture. This was us on Sunday at our mountain ranch, my little helpers, but I circled my crock pot here. So this is a pork shoulder roast made with minimal ingredients because I didn't think to pack everything. So beer and garlic, salt, and pepper, and added barbecue sauce to serve the branding crew, and it disappeared. It was a huge hit. So just a testament to how versatile pork is, and we're seeing this in basically all of our markets, and how pork holds up really well, obviously for home cooking, but also for takeaway and delivery meals, and including family style as well. It's just such a versatile product and pairs really well with so many different flavors and sides. And our estimates on what we export out of each primal, some of you may have seen these. These are based on last year's volumes, so we'll be updating obviously next year. But typically we're exporting a heck of a lot out of the picnic and the ham. I think I probably underestimate ham here, and the butt, and then a bit lower share of production being exported out in the middle because we love those cuts here in this country. But still a notable and important share being exported. Loins obviously heavily going into Japan, ribs into Latin America and China buying again now, and bellies mostly into Northern Asia. And then additionally, 2% of 2019 production was exported as boxed carcasses, clearly mainly to China. And most of our variety meats are exported, but again, the labor challenges this year have really impacted what we can produce or save for export. Just being basically short of hands, trying to move as many pigs through these plants as possible, and less dedicated staff to handle the variety meat production. But last year, 8.4 pounds per head were exported, and a value of $7.75 per head. So this is just the export data divided by kill. Nothing tricky, just to help make these numbers a bit more understandable. And China and Hong Kong and Mexico together accounted for over 80% of total export volume, with feet being the top item for China and Hong Kong. And so again, the labor shortages are significant, and here you can see, I mean, obviously we're familiar with the hog slaughter chart in that bottoming out in April and May, and then our strong rebound and hitting 2.7 million head week before last, and basically needing to be above that level through the end of this year. And it's interesting when we really dive in on the cut side, you can pretty clearly see those labor shortages impacting what can be produced in the plants. So because of the relative, call it, shortage of boneless products, for example, your boneless price I have cited here, up 75% from last year, while the bone-in heavy hams are down 5%. And so we have a relative increase or excess production in the bone-in products and can't produce enough of the boneless just because of lack of labor. And this means that we need to export more of these bone-in cuts. And I mean, the heavy bone-in ham is the best example, although we know, and I was visiting with Norman about this yesterday, we know we're also educating in Mexico and elsewhere how to utilize more bone-in cuts, including loins and picnics, to try to move even more bone-in volume out of this country. But hams are still the obvious example. And our trade data actually does combine ham and shoulder. So you can have some bone-in shoulder cuts in here too. But those bone-in exports set a record in July and still held at big volumes in August. And you can see how big Mexico is here. And this is, again, just for bone-in, but the China volumes have come back off, and Mexico being the dominant taker. But also strong growth year on year. You see my list of countries there too: Canada, Vietnam, Philippines, Chile, Guatemala, Ukraine, as Dan mentioned in the beginning, seeing some widespread growth and kind of new customers as well, helping to pull this product. And again, retaliatory tariffs have an impact. They actually have an impact on that prior slide too, but that 25% tariff disadvantage in China, our competitors take advantage of, but it has also hit our variety meat shipments. So overlaid with the labor disadvantages, we've seen basically the pounds per head that we export on the variety meats peaked in 2017, and that's not a coincidence that overlays perfectly with tariffs. So again, April 2018 retaliatory tariffs hit in China, and we're in a better situation today than we were for much of last year because of the tariff waivers applied in March. But those only applied to Section 301, intellectual property related. And so we still have that lingering 25% retaliation due to the metal tariffs in China. And so that has helped to also limit these variety meat exports. But you also note that year to date, that price or unit value is up 10%. So our volume total is down 5%. But unit price or price per pound is up 10%. It's actually showing in kilos there. So shipping more or shipping less at higher prices, again, labor being the key factor, not demand. And labor is also impacting what we can do for Japan. So as you know, Japan is a value add, high value market. And this is partially the gate price and needing to clear a price threshold for the chilled and frozen cuts. But it's also due to Japan's own limited labor and the fact that they want the closely trimmed and boneless loins, for example. And so again, labor shortages and kind of the volatility that we saw in production and pricing impacted into Japan. So our chilled volume is still holding close to a year ago. And as Dan said, our staff continue to work hard to grow and retake our market share, for example, at regional retail chains in Japan. And we see things improving and continuing to improve. But you're seeing some of our supply chain issues still showing up in the data to date through August. The big growth, which we knew would be the case, is in ground season pork. So once our trade agreement with Japan was implemented on January 1, giving us, again, a level playing field, we did see ground season pork surge back into Japan, and those tariff reductions continue phases to zero very quickly, down from 20% tariff. And so on a value basis, most importantly, 220 million, up 48% through August. And you see we've basically regained and increased our market share on those ground season pork, so adding value to picnics. And in Japan, using this data partially because we have good data out of Japan, and it really reflects what we've seen in other markets. So including in the United States, that drop in food service sales, sustained growth in retail, and specifically in meat retail. And so you can see the strong growth in meat retail, which has sustained all the way in here through August. And specifically for pork, this is per capita disappearance on a volume basis per household, some ALEC data. So on volume, the increase year on year, again, household consumption. So for at-home cooking, basically your retail product, strong and sustained increases. And the good news here too is that this strong growth on the household consumption for pork has more than offset the decrease in food service. So total pork consumption or marketing is up 2% through August, and imported shows the same, also up 2%. And then your at-home consumption of pork up 9%, sausage up 9%, hams up 3%. So Japanese consumers also appreciating the convenience of pork, including those processed pork products to make lunches at home, for example. And shifting into kind of looking toward 2021 on the supply side, these are USDA's latest projections and posted just here, I don't know, a week or so ago, and showing a rebound in global pork production. This is, of course, mostly a rebound in China and up 4% year on year, although still 9.5% less than pre-ASF. So I'm not getting too scary yet. We don't see oversupplies of pork, but some rebound starting to show up after 2 years of decreases, and continued growth, of course, on the poultry side, and modest growth in beef production, although I actually think global beef production will be possibly smaller next year. You're looking at pretty limited growth, certainly less out of our biggest competitor, Australia. On the hog pricing side, these prices continue to show the huge disparity due mostly to African swine fever. So still strong price increases through September, year on year in China and Vietnam, especially reflecting the African swine fever. And then also strong prices in Japan. And this is, again, that demand for eating pork at home and buying Japanese pork at retail, and relatively steady production. In Korea, prices amazingly holding pretty steady, even though they've had strong production growth, which has limited their import demand. And Vietnam, we're going to touch on a bit more, but increases pretty much, as you can see, across the board. And interestingly, in places like Brazil, prices really shot up in August and September. So the cheap real has really helped Brazil push out a lot more product, mainly into China, but for export. And that started to support their prices for hogs, as for corn, in these last couple of months. So starting to see some significant disappearance off the domestic market. And really the only exceptions here are EU and Mexico. Mexico, you're mostly seeing the currency devaluation because I'm showing you prices in US dollars. And in Europe, you're of course seeing ASF found in Germany in September. And then US and Canada seeing our prices finally rebound. You can also look at this as our competitiveness down here on the lower price end. So let's talk a little bit more about Europe. Lots of challenges, looking at least from the outside for the Europeans. So the industry facing some pretty serious uncertainty. Obviously, ASF in Germany and Eastern Europe, continued challenges in Poland. Brexit, clock ticking, negotiations needing to be wrapped up, basically do or die this month, and that will be a huge shakeup. You have probably read about the farm to fork strategy and the Green Deal and all of this talk, or not talk, action out of the Commission on the, call it, climate side, as well as new animal welfare requirements. So castration requiring pain mitigation in Germany starting January 1, and new environmental regulations, the nitrate directive, also in play in Germany, and then the new labor requirements. So limiting the use of contract labor in meat plants specifically in Germany coming out of the COVID situation. So some pretty steep challenges for the German producers, obviously being out of basically all of their export markets, and about 1 million tons of pork stuck in Germany. And Germany is about 9% of global pork trade. They're about 20% of EU exports. They're about 20% of EU production. And obviously most of Germany's pork that's leaving Europe is going to China, and they are clearly working hard. They've been courting China before this happened and working hard today to try to get back in the Chinese market, to try to get China to accept regionalization. I think the odds of that happening, I think we're kind of skeptical, at least of how fast China would go, certainly before anybody else. And Korea and Japan being other important markets for German pork. And again, they're kind of waiting to see. I think our staff were skeptical as well in both Japan and Korea, at least at the moment, of accepting regionalization. Also note that these Asian countries have not regionalized for other European countries once they had ASF. One fighting chance might possibly be that it's only in wild boar in Germany, but that was also the case for Belgium, and Belgium remains out. Granted, they're not as big a player as Germany, but that's clearly a huge wild card as to whether Germany gets access back in these markets. Overlay that with Brexit. So UK pork imports have already slowed this year, even ahead of the formal exit, at least on the trade side. And China is 47% of their export volume, and EU 27 takes 44%. So Europe is a huge and critical trading partner for the UK and vice versa. And you can see the top suppliers into the UK are all these European countries. Basically all the product comes from the UK, and then the little bit from the United States. And this shakeup has potential to hit us a few different ways. We could see opportunities into the UK. That is possible, although we only have a couple plants that can do the EU business today. And then the other possibility is that we see a lot more of this European pork headed into the other export destinations if it can't go to the UK. Well, I shouldn't say can't go. If it faces nearly trade prohibitive tariffs into the UK, which is looking like the possibility if there is no trade agreement reached out between the UK and the EU. And that's the clock that's ticking at this moment. So for Brexit, they need to hammer out their trading relationship essentially before the end of this month so that it can be implemented on January 1. Otherwise, you're looking at trade prohibitive tariffs on product going both ways. And that's about 1 million tons of trade two ways between the UK and the EU. On the currency situation, again, it's not all bad news with our strong dollar. And I'm using year ago comparisons here just for a simple way, hopefully, to show this. But against our major exporters, the euro is 5% stronger, Canadian dollar is about even. The Brazilian real and the Chilean peso are weaker than a year ago. And again, the Brazilian real has been the biggest move lower for the major exporters and really helping them move the product into China. And on the major importers, Japanese yen 3% stronger, Korean won up 3%, Chinese renminbi 5% stronger, Australian dollar 5% stronger, Philippine peso even 5% stronger. And of course, Mexican peso off 11%, Colombian off 11%, but better situations than we've seen at their weakest points. So again, currency remains in play, but we actually have some better position versus a year ago in some of these important markets and against big competitors, notably the Europeans. As for the macro outlook, I'm not going to spend really any time on this except just to note the decreases in GDP. This is annual, year on year, I'm showing you, and the decreases across the board, except for China and Vietnam. So the China is showing up quite well despite the virus, so first in, first out. And we know Chinese food service, for example, is killing it. According to Joel and Ming, even as of last week, business was very good through the Mid-Autumn and National Day holidays. And it's maybe the only place where you're having in-person trade shows. And so our staff are busy participating in the nearly looking normal Chinese market at the moment. And that plays into strong GDP growth for them next year. But in general, you see Asia, excluding the Philippines, relatively less hard hit and strong rebounds next year. In Korea, I joke with Jihei, they're always pessimistic about the economic situation, but still a relatively soft hit this year and a rebound expected for next year. Vietnam benefiting, a lot of analysts see Southeast Asia being very strong, especially if companies do actually get nervous about operating in China. And a rebound here in North America. Europe getting slammed, potential for a rebound there, but generally less optimism for the Europeans. And Japan hit hard, but rebounding too. And so on that, again, on the higher income households, just using this again to show partially why Japan remains so critical. It is a high value market, a wealthy market, even with some stagnation, still having a huge number of wealthy households compared to much of the rest of the world when we exclude Europe, China, and the United States. And if we look at kind of another interesting way of kind of dicing the data, so taking total import value from all suppliers per person on a population basis, and Japan is just a massive importer on a value per head, meaning person basis, and followed by Korea, Australia, Canada, Mexico, on down the line. So, and this also, we see continued potential for growth here. And certainly if I had US in here, potential for growth in the US share, and that really applies pretty much across the board here. And so record large exports have been underpinning our production growth here in the United States. And looking back to 2015, so this is showing growth in the 2019-2015 increase, double digits for pork and beef on production. And that has been underpinned by double-digit export growth. So exports of pork up 23% compared to 2015 last year. Of course, we've seen nearly that rate just in this year, and our production growing by 13%. And so far this year, again, so this is showing the growth. So the tonnage change has been dominated by China. So our increase in pork exports to China, the blue lines, was pretty dominant, but we also saw growth into Southeast Asia, Japan, Canada, Caribbean, and DR. And then I added in here what we're forecasting for next year's growth, just to give you some perspective. So we do expect China to back off next year, a decrease of over 100,000 metric tons, but we still have total US pork exports up possibly 2%. And you can see the growth offsetting this China decrease is pretty widespread. So China kind of skews everything because you can't hardly see anything else on this chart because China's swing was so massive. But just to reassure that we do see growth into basically the rest of the world next year, and enough to offset the slowdown into China. And also note that China is not just going to crater. All right, so Korea is one example that slowed down pretty hard this year. We still gained market share. Our share increased over 40%. And Korea's imports overall slowed because of less food service demand, larger domestic production, still lingering large inventories. And also note in here that Germany, being their second largest supplier after the United States, was mainly supplying single rib bellies and ribs. So it's difficult for us to take direct share of that German product because it's pretty hard to produce single rib bellies with our belly values and our lack of labor. But we could still pick up a little bit more share, and Korea will come back in and buy at some point, as Jihei had said, that importers would wait until November probably and see how things were going on price and kind of outlook, but they will be back in at some point. And another point of note is Vietnam. So Vietnam had bought strongly from everywhere, also because of African swine fever and their high hog prices. And lots of things going on here, but increasing volume from Russia. We know Russia's used to be a major importer, and now seeing a lot of Russian product in the market. And I'd asked our staff if they actually see the product in the market or if it just disappears. And they had said, yes, we actually see it in the market, and sent us pictures. So one fascinating bit here. You also have Canada in the market after not really being a player in the market previously, and part of that is the CPTPP tariff reductions. And then to try to pull even more pork in, Vietnam reduced the MFN tariff rate, or the tariff for everyone, back in July. And that also gave us a bit more of a tailwind as we've been shipping more into Vietnam too. but be watching for the softening of the price here, which we are seeing Vietnam's prices come off. And there's also some concern we were talking about internally overnight, and seeing whether German pork starts to find its way into Vietnam. And it looks like it's still not happening direct at this point. And part of that is just German vets not signing the certs. So that's kind of encouraging. But we know in the past, and with Poland, product has ended up in Vietnam and Hong Kong and can flood these markets in a hurry. So something on the fringes, something I talked with Jack about yesterday. And our team in Vietnam and Sabrina in Singapore are looking into it further as we speak. But that was sort of the read overnight. And of course, China, these prices coming off. So live hog overnight was 29.99 renminbi per kilo. We've seen it kind of stabilize around 30. It's now off 15% year on year. We haven't seen Chinese prices below year ago until basically last week. And so we are starting to see a shift here into possibly some stabilizing new high plateau for their import offtake as their production starts to rebound. The pork price was still up 14% year on year, but the official data has always lagged a bit. But also China's economy grew by nearly 5% year on year in Q3, up from 3.2% in Q2. So again, the economy's humming. You do see food service activity rebounding strongly or growing in China. And on the other hand, you have supplies of pigs increasing. The MARA data and National Bureau of Statistics data we take with a grain of salt, but they're showing hogs up 21% year on year and sows up 28% year on year. Again, hard to sort out how much their productivity will be impacted because we know ASF is still very much in play. But we will continue to watch prices as the most important indicator. And note that with our higher pork cutout, this spread between the China hog price and US pork cutout has dropped. And it's now back close to or below a year ago. So that in itself is going to limit China's ability to buy big in this market. Again, we do have that 25% tariff disadvantage. So with Germany out, it might change the math a little bit, but we still have that tariff, which basically means a discount on our product, including bone and hams, variety meats. And also note our hog price versus the China hog price were also much narrower spread and below where we were last year. So again, what this is doing, I think, is partially shifting China, their lower hog prices, that is partially shifting China back into more normal import buying. So the carcass business here in the green line peaked in December and has moved lower basically every month since and dropped back to the lowest levels we'd seen since it started last summer 2019. And at the same time, you should see sustained strong business in other frozen cuts and bone-in cuts, so basically everything else. So as China moves to buying more of the cuts that they want when they want them, and then we'll see China normalize at a new higher import plateau, lower than last year's peak, but higher than any other year otherwise. And again, just for perspective, obviously we all have a lot at stake as China's buying backs off, but look at these European volumes into China and Hong Kong. China is 70% of their export volume through August. Of course, that's before Germany found ASF, and that's already changing things. But for US, China, Hong Kong was 36.5% of our volume, and we dominate here in Mexico. We're bigger in Japan, dominate in Canada. We are now actually bigger in Korea, Australia, Colombia, and on down the line. So we're kind of in different playing positions, but we also know as China comes off, this European product is also going to be going everywhere else. And for US exports, again, here's the data through August, which you're familiar with, but total volume up 17%, value up 18%, accounting for 27% of cut production and 30% when adding variety meats. And again, there's that growth into China. On a per head basis, the increase per head for China, Hong Kong was plus 11.22, so China being 19.74 per pig. Japan increased by 20 cents, Southeast Asia increased by 36 cents, Canada by 9 cents. That's the increase over a year ago. with your total dollars, export dollars per head at 59.59, up 790 or 15% from a year ago. And again, this export growth has really been underpinning our growth in pork production in the United States. So we've noted here, and Jessica has pulled out this data as in several of these slides, but to show that 61% of our production increase was to export or was exported in 2017, a third of it in 2018, 34% of the increase went to export in 2019. And this year, you're seeing more production leaving this country than our growth in production. So again, our production increased, but the growth in exports was nearly double that. So we see less product here in this market, and that's also helping to support prices. And for next year, this is USDA's production forecast for our growth in production, and then USMEF's export forecast, again, increasing by somewhere around 2% to offset about 45% of that production increase. So exports should continue to help underpin these prices. And we don't need to go through our forecast assumptions in detail, but just included these to help maybe summarize, but there's so many wild cards out there at the moment. But again, we see US pork exports ending this year up 16%. And these are possibly conservative, but given where we're pricing today and given our labor limitations, they're probably realistic. And your variety meat's off some, again, not a demand issue, a labor issue, and for a combined total increase of 12% with about $7.9 billion, up 14%. And for next year, again, potential for a 2% increase in cuts. Possibly you see bigger variety meat exports. Really, again, depends on labor, and a combined total increase of about 2%. And so our advantages do sustain, and that's definitely the case in African swine fever. That's the assumption. We're not going to talk about anything else. And in global supplyability in that sense. And we have the benefit of having a really strong domestic market, which is critical. And the exports on top of that look for shakeup really for our competitors, and especially in Europe with the double whammy of ASF and Brexit. And that's probably mostly a negative for us because we'll see this product spilling over elsewhere, although ASF in Germany at the moment has met some short run opportunities possibly for us. And again, China's going to probably come off. We have their imports slowing in 2021 down about 23%. We do have some US market share increase, and that's partially because Germany is out. But again, we do have the retaliatory duties. So if those somehow go away, look for movement to the upside. On the contrary, if China takes away the tariff exclusions, look for movement to the downside. So there's possibly risk either way. Japan, continued growth. We'll see those tariffs notched down again on April 1, the start of their fiscal year, and everything says we should continue to regain share. And then on the negative side, Taiwan market access changes, and this is a negative mostly because of rigorous and extensive new country of origin labeling to kick in on January 1. Huge frustration. And then on the macro side, given the difficult situation we've come through, barring any massive setback from the second or third or whatever wave, looking for a rebound there, which should also be supportive. So thank you so much for sticking with us on this extensive update, and I'd be happy to take any questions.
Aaron, it looks like we got a couple written questions that came in.
Oh yeah, I was just trying to find those. Found
Yeah,
them.
with China volume subsidizing, what markets offer the best return as we diversify? So you might want to answer that one.
Yep. So, no, he took my screen away, I guess. So that's really the biggest volume mover that we have for next year is Mexico. And it's partially a rebound there. I say it with a bit of a hesitation because again, Mexico's production is growing strongly. I credit that partially to our retaliatory tariffs, and we really supported Mexico's hog prices in 2018 and into 2019, thanks to our retaliatory duties on metal. And production was already growing there, but that didn't hurt them at all. And their labor advantage. So Mexico producing more for export, and specifically into Japan, but also this year into China. And so there's a bit of a hesitation there for me just because Mexico's production is growing. But on the other hand, I was talking with Gerardo last week, and I mean, again, pork plays so well in the COVID world. So he sees restaurants doing obviously takeaway for survival, but pork works great. So you can do pulled pork, obviously, but a number of pork items, again, they hold up well for takeaway, and obviously all the processed pork products too, but hold up well for takeaway. They function with family style. And then the whole growth in retail sales of, again, of processed pork products or the fresh pork going into your home cooking. So our team obviously aggressive down there working on both retail and food service. And I think there's room to grow back into that Mexican market. And of course, we need it to take those bone-in items. As Norman and I discussed yesterday, a wider range even of bone-in product. Again, because Mexico does have the labor. So Mexico is the big volume mover, but really then it's across the board. So even across Latin America, Jessica Spreitzer and I were talking to Jessica Holka yesterday and moving more of like individually packaged sirloin products, again, kind of a convenience item. And then our staff, working together across all of Latin America to play off of what they see working and moving across these various markets. So from Mexico to Central and South America. And so again, the economic headwinds are there, but they seem to be easing. And so big potential in Latin America. And then of course in Southeast Asia, as we've seen this year, in potential to grow back into the Philippines, which was the one that was hit hard this year. As you see some hopefully normalization next year, and still the need for protein. Their African swine fever situation also still in play. And hog prices had been quite strong here recently, so potential to do more into the Philippines, as well as what we've seen, the increases into Vietnam. We mentioned Japan. Clearly we see strong growth into Japan next year. Again, retaking more of that chilled share, sustained growth in ground season pork as well. I'm looking, what am I missing? We expect some rebound into Australia too, which had come off this year, rebound somewhat into Korea. So again, it's pretty much across the board, and some pent up demand too, after we had shifted into China. And again, because of our limited labor.
Aaron, we have one other typed in question here. What statistics or drivers are you seeing that could potentially have China reducing production?
Evan, do you mean reducing production or do you mean reducing imports? I don't think we see China reducing production again next year. I mean, it could happen if ASF explodes, but we pretty much have a rebound factored in to some degree. Now, granted, I don't see China's production rebounding to pre-ASF levels within the next 5 years. We'll obviously be watching that hog price closely and just reevaluate, but at the moment, we think this is going to take time. They are making huge structural changes and possibly even things like some more vertical integration. But basically, we're expecting a rebound in production to some degree, and we expect to see these imports come off and start to set a new high plateau, basically like we've seen with other Chinese supply and production cycles. So this one's hugely dramatic, but still not really unlike what we've seen in the past, potentially, for how this shakes out.
Other questions for Aaron?
Are you able to hear me?
Yes.
Yep.
Okay. Hey, what's your thoughts on the effect of Canada with all the suspension of plants and how that, because they're going to have to redirect all that meat somewhere that currently not in the freezer. Are you thinking it's going to affect the domestic market? You know, they're going to focus that meat somewhere.
Yeah, so with Canada's plants suspended for China, right? I think that's what you're referring to.
Correct. That's correct.
Yeah, so I mean, they have had at least one big plant out since the beginning of August. I believe that's right. So this has kind of been in play, and we've still seen strong demand for US product in Canada. Possibly some reshuffling there, but again, they have the tariff advantage versus us in the Chinese market. So at least to date, somehow, I don't know, I hadn't seen as big of an impact as I had expected, I guess I would say. And of course, I only have trade data through August, but through August, Canada's shipments to China remained strong on the whole.
Right. They've had numerous other plants suspended, and they're having quite a documentation issue on not understanding the Chinese law, as they're not coming across very clearly. My concern is their effect going into, as we all know, if they need to move meat, they're going to move meat at what price. And I would say the biggest downfall would be Mexico, because they're able to move it quickly and able to adjust very promptly on that.
Yeah, no doubt. I mean, that's what we saw last year when they were out of the Chinese market for the entire second half of the year. They shifted heavily into Mexico. So yeah, you're exactly right. I mean, to your point, I had heard from Canada that China was on a COVID hunt, and yeah, they've had a couple other plants suspended since that initial August one. So potential for further competition in North America, no doubt. And that's sort of my concern leading into next year, is if China's hog prices really soften, then you could see more trade barriers. I mean, we know that's been the case, and we know this COVID thing is still live. I mean, our staff is reporting in about it last night and the night before, about the finding of, live novel coronavirus on whatever it was, cod or something. Cold chain product. So you're raising several good points, but one of them being that the COVID risk is also still in play for plant suspensions in China, and for possible product testing positive on arrival and being out for a week, as their latest WTO notified procedures said. I don't know, Travis can chime in with anything else on that too, but certainly risks.
Any other questions for Aaron? Stan.
Yeah, Aaron, first of all, thanks so much for doing this update. It was very interesting. There's a lot of information, and if I ask a question that might have been covered, I apologize for that. But you talked briefly about the cold storage, what is or isn't in some of the cold storage after it had been down. I don't know if you can talk any more about where that is now, and also the line capacity, and are most of the lines running up and going, and the hogs that are becoming market, are most of those all being run through now?
So we have USDA's latest cold storage report is this week. So we will know more about cold storage inventories when that USDA report is posted. So yeah, I'm not going to speculate any further on that. It's going to take some time, I think, to catch those back up. But and then I mean, Dan, do you want to talk to kills or?
Yeah, Stan, I think the information would indicate that the slaughter side is back up to 95%, give or take. It varies by week, by day, but not back to where we were, but close. But we also know anecdotally that there's still a shortage of labor overall, especially on the fab side, which Aaron alluded to it earlier. With further trims product specifications, for example, that Japan has, single rib bellies, things like this, it makes it tough to get all the volume that I think a lot of our exporters would like to get. So there's a constraint there. And then, the data would also tell us that, the variety meats year to date, pork variety meat exports year to date are down considerably. And
5%.
yeah, we know a lot of that is attributable to lack of labor. So that's kind of the snapshot by sector.
Thanks so much.
And yeah, and Stan, we know there are some regional differences too in slaughter, and this was talked about last week by some of the university professors too. So there's still some regional disparities in being able to get these hogs killed, but basically, I mean, we need 2.7 million head per week, roughly, or more through the end of the year. And it was encouraging to see that week before last. And so hopefully that pace can continue through the end of the year. And that's kind of at least the high line metric that we're watching. Anyone else?
Any other questions? Aaron, I have one. We have a few minutes left, but we had a big month in August with Vietnam, and I know that's African swine fever impact there. Could you take a minute or two and maybe just give a little deeper dive on some of the dynamics going on there? How quickly do you think, is there any information indicating repopulation in Vietnam, this sort of thing?
Yeah, thanks, Dan. I'd have to look up the latest government data out of Vietnam, but I think that Vietnam is a bit behind China on the rebuild. I mean, this is partially structural. So China was largely backyard, but Vietnam was like entirely backyard production. So in my mind, it's gonna take a bit longer to rebuild in Vietnam because they're at a different starting point than China was, and because the real hit to their production was also somewhat later than what we saw in China. So they're kind of behind that curve. And we also didn't see the imports really boom into Vietnam until later as well. So again, it's kind of a slower, or they're on a different trajectory. But I think that you're still going to see strong demand in Vietnam going into next year. Part of the concern there is just the competition, I guess. So again, wondering whether and how much German pork finds its way in. Obviously, Russia is huge. Brazil with that big currency advantage, and knowing Vietnam is very price sensitive, we don't have the TPP, the CPTPP tariff advantage. So even though there's the temporary reduction, that may not sustain, and it's for cuts, not necessarily variety meats. So a lot of dynamics to potentially still impact that market into next year, but their offtake should remain strong on the whole. It's just going to be a lot of competition in that market, especially if China backs off. Europe being the biggest, but everyone else there now too.
I hate to ask two questions. Hopefully I'm not stepping in front of anyone else, but I'll take the chance while I got it. Obviously, you just mentioned the fact that, like in China, they're actually doing trade shows now again. And I don't know if you could comment any further on any place else that are actually doing trade shows or any type of promotional events. I know that we were all lucky to be able to have the ambassador in Branstead in China do his event last month, where we could showcase beef and pork there. Was that kind of an unusual situation, or are there other events, activities that are going on, whether it's in China or anywhere else that is possible at this point?
Yeah, I mean, Dan, take it away. Our staff are they're promoting every day, just in various formats.
Exactly. This is one of the real advantages of having international staff all over the world on the ground, because they really haven't missed a beat. We've had promotions ongoing virtually all over the world. As far as the shows are concerned, yes, China and Taiwan are probably the two anomalies that were way ahead of the curve. So yeah, we're back to having in-person shows, but our marketing manager in China, Ming is in quarantine right now because he had to quarantine for 14 days coming from Taiwan back to China. So I think he has another 8 or 9 days left to go. So it's not easy for a non-citizen to get back into some of these markets. So consequently, that kind of limits foreign travel. But I think another show that is scheduled to go off, big show, is Gulf Food in Dubai in February, but we're not to February yet. So we'll see what happens there. Okay, any other last questions for Aaron? Well, we'd like to thank everybody for your time today, and we really appreciate it. Aaron, any last notes?
I don't think so. Thank you all. And don't be shy. You can always email us questions as well. So thanks so much for joining us. We know you're all busy and probably Zoom fatigue. So really, really appreciate it. Please take care.
And thank you for all the thing the USMEF staff does for us every day, like you said, not only here in the United States, but more importantly, internationally. So thank you very much.
You're welcome. Thank you, everybody.
Thank you.